Hello everyone, welcome back to Forex Signals TV. I'm Shain Vernier, market analyst at forexsignals.com. A few weeks ago I put out a YouTube video called Learn 2 Bollinger Band Strategies in 10 Minutes. The tutorial was well received and is now being traded by a few of our trading room members. Today we're going to expand on the concepts in that video and take a deep dive into all things band trading. Generally speaking, a given market trends roughly 15% of the time. This places trend traders in a precarious position. What is to be done the other 85% of the time? That is truly the million-dollar question. The best answer is to find a strategy that doesn't need a directional move in price to generate positive expectancy trades. Enter band trading. Band trading is one methodology that works in a variety of market conditions. Band trading strategies attempt to capitalize on a market that has established pricing zone or trading range. That's why band trading is often called range trading. Now, the best thing about band trading is that it is easy. In essence, all one does is buy the bottom of a trading range and sell the top of a trading range. That's it. Buy the bottom, sell the top. Think of price as being in a stretch rubber band. When we range trade, we are anticipating the rubber band to snap back to its original position. When it does, we profit from price moving from the extremes toward the mean value. Of course, the key to band trading is to define a useful trading range. That's where the bands come in. They do the heavy lifting for us. All right, that's enough talk. Let's hit the charts, break down band trading, and add this powerful strategy to your tool belt.
Okay, there are three basic types of bands. Number one is channels, number two are static bands, and number three are dynamic bands. Channels are just a set of parallel lines that encapsulate price action. Static bands are those that are a fixed amount away from price or a mean value, and dynamic bands are bands that ebb and flow, really representing the current state of price. Let's dig into each type and really show you how to add these just on your basic TradingView platform. The first type is channels. The most common type of channel used in the live market is Donchian channels. So you just go right there to indicators, you go to Donchian, boom, Donchian channels pops up. These are public domain indicators, which means you don't have to pay, you don't have to do anything. These are available to everybody typically on most platforms. You'll see the Donchian channels are just a set of parallel lines that encapsulate price action. We have some default settings. You go up here, you can tailor these to any length you would like, and that'll give you an idea of where exactly the channel is going to be. And like we said earlier, very, very simple to trade. You sell the top of the channel right there, you buy the bottom of the channel, and that's basically how you build positive expectation trades within band trading. The second type is static bands. Now, static bands are sort of similar to channels, but in this case, they're going to be a fixed amount away from price. So in order to set these up, we're going to look for a simple envelope. Public domain indicator, it doesn't get much easier than envelopes. Right there, you can see exactly where our band locations are to the top side and to the downside. And one of the great things about these static is we can tailor these to anything we want to do. We can pick a length, we can pick a percent away from price, and also a close. So let's say I like the length at 20, but I want a tighter band. We're trading the British pound USD. Let's say I want a 15, or let's say right here, I want a 5. I want to be 5% away from price. You'll see right there, we get much tighter, and perhaps that's a better way to trade the Great Britain pound USD with a much tighter band. I'll leave that up to you. And the last type of band is my bread and butter. If you've ever watched me on a live stream in the trading room, then you're familiar with our next tool, dynamic bands. They keep us current. They keep us really lined up with what price action is doing right now. My favorite type of band by far. And you probably already guessed it if you've watched one of our live streams or one of my live streams, and it's going to be Bollinger Bands. We just click right on our Bollies. We got our Bollinger Bands lined up. This is a dynamic tool. We can tailor with the settings any way we like. Right here, we can pick a different length. We can pick a different source. Standard deviation, you name it, we can dial this in exactly the way that we want it. And you'll see right here that these bands aren't parallel. They're not at a static percent. They ebb and flow with price, which means they tighten and widen. So that's my favorite type of band. Those are the three types of bands. You've got your static, you've got your channels, and you got your dynamic. So very, very easy to trade. Sell the upper extreme, buy the lower extreme. It's as simple as that. Okay, here are 3 tips to help you make the most out of your band trading. First off, respect your product's historic volatility. If you're trading an extremely active market, such as crude oil, you're going to use a different band setup than, say, the Euro USD or the US 10-year bond. Remember, if your bands are too narrow, it's going to lead to overtrading. You're constantly going to be dodging in and out of the markets. If they're too wide, you're not going to get into the market enough. You're going to undertrade, and that's almost as big of a problem as overtrading. Secondly, you're going to want to understand the concept behind your bands. Before you can use any type of technical indicator, you need to be fully comfortable with its form and functionality. If you're using something like Bollinger Bands, understand that it's dynamic. It's going to ebb and flow with price. It's a current reflection of where elasticity is and gives us an idea of where we're at that moment, whereas channels and envelopes, they're more static in nature. Typically, you're going to see a much different types of trades being executed with those types of bands in respect to a dynamic band. So always understand the concept behind your band. And lastly, you have to use the indicator, the bands, inside of a comprehensive trading strategy. You need finite parameters governing market entry and exit. You also need definite parameters regarding money and risk management. Those are keys. It doesn't matter how good your indicator is or your strategy. If you don't have a comprehensive plan, it's very, very difficult to establish long-term profitability in the marketplace.
No doubt, band trading is one of my favorite ways to approach the markets. Why? Because it is straightforward and performs well in a variety of conditions. However, it does have some pros and cons you should consider. On the plus side of the ledger, band trading works in bullish, bearish, and horizontal markets. It can also produce an abundance of trades, far more than trend-following approaches. In this way, band traders are able to establish a smoother equity curve than trend traders. Conversely, the nature of band trades dictate that they go against price action. This is a difficult concept to grasp for momentum breakout and trend traders. And during extremely tight market conditions, there isn't enough volatility to trade with bands successfully. That's why we have to be very careful when we apply bands and understand market state thoroughly. Always remember, there's no holy grail to successful trading. Winning in the markets requires the 3 Ds: desire, drive, and discipline. No matter how solid a strategy may be, it needs to be executed consistently over time to be profitable. Bands are no different. The secret is you. It is up to you to build and execute a band trading approach that can stand the test of time. When you do, you will have achieved something you can truly be proud of. As always, we value your patronage here at Forex Signals TV. Be sure to check us out on the socials, subscribe to the channel, and leave a message below. The next video in this series is a comprehensive primer on value trading. Don't miss it. Until next time, trade well, and we'll see you at our next live stream.